is Vicki Parks Murphy with Berkshire Hathaway. I'm back with Nancy Everett for the third part of our series on lending. So I think that something we definitely want to talk about is purchasing power, right? Because we know that in the last 6 months we've seen the market with the interest rates going up, and of course neither you or I can see the future. We don't know what's going to happen, but certainly we've seen this trend. So, if interest rates were to continue to rise, then that's really going to affect some of the people that, are getting these loans. For example, if, there was somebody, let's say, that was able to borrow $1 million, right? And let's say that the interest rates were to go up a percentage. How would that affect somebody just on a monthly payment basis?
Probably their payment would go up about $600.
A month?
A month, yeah.
Wow. So, over the course of, let's say, a 30-year fixed, you're looking at something, you're going to get into 6 figures there.
You sure are.
Pretty quickly.
You certainly are.
So, okay, so, just to kind of summarize that idea, because I know sometimes when we get into interest rates and everything, that's not everybody's cup of tea. I'm certainly not a math genius, so, and I'm so thankful you're here and you can calculate this for us. But so if you're looking at borrowing $1 million and interest rates were to go up just a percent, which we've seen happen, then you're looking at $600 more a month in payments. That's a lot of money.
It is.
So let's take a look at it a different way. So let's say that we had somebody that is looking to purchase something at 1.4 million. So, and that's actually, and a lot of the zip codes we're looking at in Studio City, Sherman Oaks, Encino, that's an average listing price right now is 1.4. Mm-hmm. So if we had somebody looking to purchase a $1.4 million property, and again, we're in this situation where maybe they feel like they're not quite ready yet, they're looking around, they're spending a lot of time hemming and hawing, they're on the fence about it, and interest rates go up another percent, then what are we looking at in terms of purchase power? What price range are they now tied into?
Well, let's say they were putting 20% down.
Okay.
So $1.4 million today might translate into about $1.25 million and $1 million loan if the rates were to go up a percent. So that's $150,000 in buying power. And a lot of times when people are negotiating, they're talking about $75,000, $100,000 difference. So today, they're going to have a lower payment for that same price than they would if interest rates went up.
Right. So, again, just to summarize on that idea, if we see these interest rates continuing to go up, that is really going to affect just the house price that buyers are looking at, which is a big deal between a $1.4 million listing and a $1.25 million listing. That can be a big difference in terms of the amount of house that you're getting.
It sure can.
Okay, great. Well, listen, thanks again so much, Nancy, for joining us. It's been great to
Always,
hear your
Vicki.
thoughts on this.
Thank you.
And again, if you would like to talk more to Nancy or myself, please feel free to get in touch. And we're here to help you find a home. So thank you.